Good morning. I bet it's raining there, right? It's a pretty safe bet. Not yet. Cloudy though, right? Good morning, oh, I'm gonna screw that up. Is it Mahmood or Mahamud? Mahamud? I don't know. Mahamud? Mahamud? Is that it? Yeah, close enough. Oh, I got it. All right. Well, thanks for joining us, everybody. All right. Um, Typically, what happens here, we have an event that we're going to start, and of course, everybody puts off logging into the room for the until just the last second or two. So while we're waiting for them to come in and find their seats, go over some just real simple ground rules that we have here for these events. We certainly encourage you to ask questions, um, but I will not be reading the chat. Okay, so what happens when I do that is I get sidetracked, and the whole event takes much longer, and I end up answering questions to one person, and maybe nobody else has any interest in that. So what we prefer to do is we've got Connor and Praveen and Lisa here. We've got Mike and Dennis and Bob and a whole bunch of our traders here. Our traders often like to come to these events and help us out and share their experiences. So feel free to ask questions in the room or in the chat here. Just don't assume that I'm going to answer them, okay? Because I won't even be reading them. The only way that I will stop is if somebody from my staff here sends me a little chat message on another uh, chat service that we use and lets me know that I need to stop and address something. So otherwise, they can answer most of your questions for you, okay? Now, we're going to do this. I got a lot to go over today, and I've got some help today. We're rolling out a new suite of products that are more tuned to trading on the Forex markets, the Forex pairs. So what I'm going to be talking about today relates to both futures and Forex. However, those Forex traders that have been maybe not paying a whole lot of attention to us over the years because we didn't have things optimized for them, uh, we're throwing in a little bit of information along the way. I'm going to have Praveen come on a couple of different times and talk to the Forex traders for just a couple of few minutes, and then we'll go back to the presentation. But we wanted to dodge away from Forex, oh, I mean, from the futures slant of the presentation a little bit to give the Forex traders some insight on how this can work for them now. Um, so as we have been doing this pretty much this exact same thing for years. The type of trading that we do. Um, we have been very big on using NinjaTrader, and for the longest time, NinjaTrader was really just for or designed for or especially useful for futures traders. Well, they're putting in a lot of effort to now appeal to more and more Forex traders, which is really great because the tools within NinjaTrader are dramatically better than they are for MetaTrader, which is what most Forex traders like to use. I think mostly because it's free. Funny thing is, so is NinjaTrader. So we're going to talk about that a bit. What we have found that happens is that we invite everybody to come to our events, and then we get this. It happens almost every event. Oh, this looks great. This is exciting. Does it work for Forex? And we'd say, well, yeah, kinda, but it's going to require a good bit of effort on the Forex trader's part in order to tune it for Forex pairs, because we, not Forex traders, we trade in our trade room, and all of us here on our staff trade futures. So everything was tuned for futures, but we kept the Forex people just kept saying we need it. We don't want to tune things. We just want to be able to put it on a chart and it works. So that's what we've done now. That's what this BuntX is all about. So you're going to be learning a lot about bunt trading today, and we're going to throw in some of the X stuff, which will help you understand a little bit better how we're approaching the way we trade and how we're approaching it with our Forex traders. So right off the bat here, I want to go ahead and let Praveen jump in and give you a kind of you Forex traders. We're gonna take just a few minutes, and we're gonna let Praveen talk just a few minutes about the differences between trading with NinjaTrader versus MetaTrader. Okay, so here's Praveen, and he's going to talk to you now. Praveen, he's on our staff. He's our IT support guy. He helps with platform support. He helps with indicator support. He's a trader himself. He's also a trade room moderator. So he knows all about this system inside and out. And he started it with Forex. So he does have some experience with Forex and understands the Forex markets a lot better than most people, even people trading the Forex. So with that being said, I'm going to stop sharing my screen, and I'm going to let Praveen start to share his screen. Praveen, you got your mic on?
Hello? Can everyone hear me?
That sounds good.
Fantastic. Okay, well, good afternoon, everyone. Oh, good morning, actually. It's actually quite dark here, but how is everyone doing today? So my name is Praveen, and as Tony explained, I actually work in the back end of the Intentional Trader. So although you may not see me in these webinars a lot, I do operate outside. So when you're dealing with after sales support. Oh, my screen. Once moment, guys. Just got to get my screen up. Sorry about this. One moment. Sometimes it takes a few moments for this to pop up. Just how it is sometimes.
So of course we test these things out.
Yeah, we tested, but it's just.
And we tested, and we made sure everything was working, and everything worked great.
It's just how.
This is just the way it works with technology.
It's just the projector sometimes. There we go. Just take some time. I don't know why. Okay, there we go. Yep. So, yep. Okay. So, hopefully, guys, you can see my screen and everything. Okay. So, I basically, as I said before, I deal with all the technical aspects, all of the backend aspects. So, I'll just show you or highlight the differences between NinjaTrader and MetaTrader because being a ex forex trader as well, I know the differences between MetaTrader and NinjaTrader since I've used both platforms and I've been through the trenches. I've been through all of the hardships with MetaTrader, and I've been with NinjaTrader as well. So mainly the differences between the two platforms, MetaTrader and NinjaTrader, is that MetaTrader is a very basic platform, so you can also features with it. Sorry, not features. Sorry, forex with it. You can't implement highly advanced strategies. Sure, you can implement advanced strategies, but you really can't implement strategies at like the code base level. So both platforms are free to use. They're completely free to use. So you can download it from any website. So if you go to Pepperstone or Opari or Forex.com or FXCM.com, you can get them for MetaTrader and for NinjaTrader. And they also offer completely free data. I mean, I'm not sure how long MT4 trials are now, but NinjaTrader offers a 30-day free trial for all participants. So if you want to use Ninja and its free trial, you can do so. And the platform lasts forever, so there's no time restrictions. You can use it forever, but there is a time restriction with the trial. And to be honest, you can just re-sign up and you get a new login, so it's a-okay. And the main thing that differentiates MetaTrader with NinjaTrader that is 100% irrefutable is that it has market replay. Market replay is probably the best thing that has ever come out in the trading industry because it allows you to go back in time, see how the trade pans out, physically take trades. So it's pretty much like you stepped into a time machine. You came out maybe 2 days ago, and you get to practice that day over and over, just like a fighter pilot does, or maybe just a normal pilot. So just like that, you get to use market replay, completely free too. And not only that, it's also under active development. Some people have the misconception that NinjaTrader, oh, no one uses it for forex. It's not in active development. But actually, to the contrary, there are many vendors, and the vendors are vetted, which I will talk about shortly. So bear no mistake, it isn't under active development, and you can use forex on all major currencies, all major currency pairs. And like I said before, only vetted vendors are allowed. In MetaTrader, it's basically who knows. You're dealing with the wild west. You don't know who's who. You don't know if you're getting a product that you can trust because they're just in here in one day and out the next. So only really vetted, like really reputable vendors are allowed in NinjaTrader's ecosystem. And then you have advanced chart trading. So advanced chart trading basically allows you to physically place trades on the chart. Now you can't do so in MT4 because there are expert advisors and so. But like I said before, you can't. The expert advisors can only do so much. They can't physically create like a division in the chart and allow you to place trades up and allow you to right click and place trades in like that. So the chart trader is amazingly flexible, and you can place trades just on the chart by right clicking it, and placing a stop limit order, so it's very easy to use. And the next point is that it is a completely unified platform, and indeed, the brokerage experience is unified too. So you have what you do is that you simply go to ninjatrader.com, which I will show you right now. So what you do is that you simply go to ninjatrader.com as so, and you enter your email. You press download now. You enter all your details. You press submit. Then you'll go onto this page. You'll basically get redirected to this page. Simply download NinjaTrader 8, which is the latest version of NinjaTrader. Press download, and then you're off to the races. And you'll get a special email from FXCM, which will allow you to add this connection directly into your NinjaTrader platform, which will allow you to then indeed um, use Forex. So it's as easy as that. So it's a very unified and simplified brokerage experience. And there's precise and fast executions on the FX board. So if I will show you what the FX board is, this is what it is. So this is what the FX board is. It allows you to place fast and precise executions, which I will talk a bit about further. And then the execution, like I told you before, is provided either through Gain or FXCM. Gain, another word for that is I think it's they trade under Forex.com. So if you go to Forex.com, that's the parent company is basically Gain Capital. So you can either trade with Gain or FXCM, and the reason why they have two partnerships is to ensure that you have that unified broker experience. So there's no fragmentation anywhere. It's and if you have any problems, you can directly go to the platform, not the brokerage. I mean, the brokerage can only do so much because they didn't develop a platform. So you can just directly go to NinjaTrader and they can sort everything out for you. And like I said before, they can sort everything out for you. And if you have any technical support problems, you can either ask us if you have an indicator issue, or you can ask NinjaTrader. So the differences of NinjaTrader is that also you can use multiple monitors. Whilst MetaTrader, as you guys can see, you guys are probably familiar with MetaTrader, is that it's all tucked into one layer. So you have your market watch, you have your navigator, you have all the charts, you have your orders here. But as you can see, it's a very simple experience. So you can't really get out of this walled garden. It's basically within this application, you can't do anything like outside the application. So when you're in NinjaTrader, you can freely play with the charts. You can freely play with the charts. You can freely have the FX board on another monitor. So that's the main difference with NinjaTrader as well. So every window is independent. So now that I've explained all the differences, I will turn it back to Tony. Okay, thanks.
Awesome, Praveen. Thank you. All right, so let me get this recorder going again, or this projector going again. Yeah, Wayne, it was. You should have gotten an email, but if you didn't, Connor will send you an email with the link, or he can put the link in here for the event that we did on Thursday. Hold on just a second. Projector is really slow today. Normally we can just switch back and forth, but for some reason, and this is I believe a function of the ClickMeeting servers. All right. So what I'm going to ask most of you to do, and again, we're addressing our new Forex friends that are coming to join us, but pretty much everybody from this whole two tick to paradise thing. Okay. First thing that pops into your head is, well, how in the world can you make any money at two ticks? And honestly, this is actually one of our most popular webinars because by the time we're done, hopefully, you probably have me on two different computers or browser windows there, Dave. Is anybody else hearing an echo? Praveen, is your mic on? How about now? Still echo? Okay. All right. Echo's gone. Okay. Thank you. Yeah, I guess one of us left our mics on. Okay. So what we're doing now is asking you to kind of quit having the assumption that things are the way you think they are or the way they seem. It's and again, we're going to ask you, like we did on Thursday, to adjust your perspective. Now, we think we often can look at something and think we know exactly what we're looking at, which is in this image we see a Rubik's cube sitting on a piece of paper on a table, right? So that's what our eyes tell us. That's what our mind tells us. That's what everything that our senses are telling us, that this is a true thing that we're seeing here. But if you change your perspective just slightly, you'll notice that that what you thought you see, what you thought you understood, what you thought you knew to be absolutely true becomes not true. It becomes something other than true. It becomes potentially an illusion. And unfortunately, it took me a lot of many dollars before I got to a point where I realized that my perspective on trading and what it was that I wanted to accomplish was an illusion that just keeps getting repainted by all of these people and the forums and in other webinars that I would attend and trading systems and whatnot. The problem for me was that every time I entered a trade, I became an emotional wreck. Every single time, okay? Because I was so focused on money. So I would get into a trade that looks something like this maybe, where the markets are trending in this way. And so I might get in and start hoping, right? How many of you jump in a trade and your first emotion is hope? Okay? Or it could be fear or panic or confusion or whatever. But I would get in, I would start hoping, and then I'd start panicking a little bit, and then I might get angry that the markets were against me because I was losing money. I might get stopped out, and then all of a sudden I was getting ahead. I felt like the smartest guy in the world, and I'm like, oh, this is going to be great. I'm going to get rich, and today's going to be an awesome day, and then the bottom falls out, and you end up just giving up. Okay, I lost on that trade. I just can't do this anymore. And then of course, you know what happens, right? After you jump out of a trade, after you finally give up, it ends up going to target, and then you sit there and you just kill yourself for having exited that trade, right? Of course, if you don't, then you end up getting stopped out. So it doesn't matter what you do, the markets are against you, right? That's absolutely the feelings that we have when we're sitting in the markets trying to ride it out. And then you tell your mentor, or you tell your the guy that sold you the trading system, or the guy that's the moderator of your trade room, and you tell them what's happened, and they say, well, you need to manage your emotions. You need to trade like a machine. You need to make sure you just follow the rules and don't worry about anything else. And that's all you need to do. Okay, so I tried that. Didn't work so good. Come to find out after many years that it's and a lot of aha moments, it's nearly impossible for single or small lot traders to ride the emotional roller coaster. In fact, the statistics are overwhelming that you will not succeed in overcoming your emotions. So I decided, well, hell with that then. What can I do? What can I do to not have emotions ruining my trading for me? So I started thinking, okay, I know when I watch a chart, and I sat, and of course you sit and you watch a lot of charts. I knew, or I thought I knew, that I could pretty much anticipate when price were going to move at least a couple of ticks in one direction or another. And so I tried that, and I started thinking, well, if I could just figure out every time price did this, I knew that something was about to happen, and sure enough, I was right. Generally, it was going to be within a couple of ticks, and it was going to happen very quickly. But nobody ever taught me that that was a good thing to do. Okay? So I started thinking about what it was that I was really wanting to do. And so it actually occurred to me one day when I'm thinking about how do I manage my emotions, and of course emotions are all about money, right? We're all petrified about money. And how do I manage my emotions? And I started thinking, if I could just win 2 ticks a day, if I could be guaranteed, and of course I know there's no such thing as a guarantee in trading, right? We all know that. But as a point of illustration, because that 2 tick thing seems so simple and predictable, what would be my income limiting factors if I could win 2 ticks a day? And that's it, just 2 ticks a day. What would be my income limiting factors? And it occurred to me that the only limiting factors would be the size of my trading account and how many days I could trade. Would be the only limiting factors on my income if I was guaranteed 2 ticks a day. So there's no guarantees in trading. I know that. But that was kind of an eye-opening aha for me. Now, you're sitting there, many of you are sitting there going, well, what is 2 ticks? I mean, that's stupid. That's nothing. That's not money. That might be a McDonald's or some donuts or coffee or, Alka-Seltzer for after your horrible trading day. That's all 2 ticks is going to get you, right? That's because we have this perspective on we need to come into trading and start making a bunch of money. What we need to do is build confidence. We need to do something consistently over and over and over again. Now, we don't have any systems out there that are guaranteed winners, right? But we need to be consistent. All right? We got to start learning how to end the day as a winner. And if that means 1 tick, okay. But you've got to develop a level of confidence that says that you can do this. Now, how many days in a row can I do this? How many days in a month can I do this? You first have to learn to be consistent, and then you grow from there. Okay? I've got a quick story I want to tell you, a quick illustration, all right? I used to live in Houston, Texas, living in a townhouse. A guy across the street from me, his name was Bill. He was about 80 years old, and he caught me one day pulling my golf clubs, or putting my golf clubs in the car with my brand new golf shoes and my brand new golf bag and man, I had a nice setup and I was going to play golf. And Bill says, hey, someday I'd like to go play golf with you. And I said, okay, sure. And so, sure enough, he came back over and he says, hey, when do you want to go play golf? And I'm like, oh, geez, really? All right, well, because I'm in my early 20s. I mean, I'm big and strong, and I got, I can just crush a golf ball, right? So, and here's this old guy, he can barely walk, and I say, okay, well, let's go. And he jumps in the car with 3 golf clubs, and they looked pretty much like these golf clubs that he got at a garage sale. And I'm like, oh, geez, this is gonna be bad. So we went to the golf course, and we go out on the first tee, and I decide I'm just gonna just crush it, and I'm just gonna show this guy how to really play golf. And man, did I just wail away at it, and it went 300 yards, probably 2 fairways over, right? And but man, did I take a mighty swing at it. And so Bill steps up while I'm out in the woods looking for my golf ball, and he just takes a little swing at it and just hits it straight about 100 yards down the fairway. Not even, but just not even a big swing, just an easy straight swing. I'm out there looking for my golf ball, digging around. Bill takes another little easy swing. He hits it straight, just a little chip shot, just straight. I go whacking at it again, and it goes in another tree, and Bill hits it right up on the green while I'm still whacking away at it, just putting all my might into it, and I'm just swinging like crazy. Bill, of course, goes in and just rolls it in the hole and just waits for me while I just keep hitting it as hard as I can and hitting it all over the place, because I don't practice, right? I only show up to play golf, and so I'm chipping and chipping and chipping, and I finally get it in with about a 10, and of course Bill pars it, and he never ever hit it hard. He hit it straight, and he hit it straight consistently, and every time he took that rusty golf club, there was nothing fancy about it. He just walked up to it, took an easy swing, and hit it straight. So that was a very important day for me. So what did I learn from Bill? Nothing. Not a thing at first. Okay? I've seen golf on TV. I've read books and magazines. I've rented the tapes. Back then it was VCR tapes, right? I know from my own personal observations that to be like the pros, I need to do what the pros are doing. That's how you get good. That's how you're good at golf. I see the pros stepping up to the tee box and killing it, absolutely crushing it. And so to me, that's what I needed to be doing, because that's what the pros do. But eventually, as I got older and wiser, I did learn from Bill. Get good at doing something simple. Doesn't need to be fancy to be good. Those rusty golf clubs did a great job. Quality beats quantity, right? I could drive it a heck of a lot further than Bill could, but he could hit it straight. Don't try to do what the pros do or make any assumptions that you could ever do what the pros do until you can consistently do something very simple, very basic. Being consistent is better than the big gains, the potential of big gains. And potential big gains equals potential big losses. Okay? And certainly don't overcomplicate it. Man, was I trying to overcomplicate it. Fades and draws and, different. I had 3 different pitching wedges. He had one. I don't even know if he had one. I think he had a 9-iron. And patience, boy, patience wins the game. And it's more about what's in your head than what's in your hands, meaning that trading is more about what you know and understand than the actual execution of the trades or the trade indicators or charts or trade rooms or whatever. Okay? All of this golf stuff plays right into what I needed to know to be a successful trader. All you got to do is start with a very simple system, which is what bunt trading is. Win 2 ticks net for the trading session. Quit trading live for that session. You could continue trading that session, but in sim. But you ended that trading session as a winner. That's what you need to do. And you need to do that consistently. And the goal is to see how many consecutive days you can end the trading session as a winner. You hit your goals. You go for 3 ticks now. Okay? Once you've gone for 3 ticks and you're comfortable there, now start trading 2 contracts instead of 1. This kind of thing starts adding up, but you're taking incremental steps to build a foundation of success. Okay, you do that and then you just repeat and eventually start increasing contracts. So how many ticks do you need, you know? You start out small and you don't need a lot of ticks if you can become consistently awesome at these small chip shots that go straight, right? And the beauty is you're out. You're in and out of these markets quickly. The big money doesn't want you to be in and out of these markets because then they don't have the opportunity to manipulate you. All right, so here's a faulty assumption of the many hundreds of faulty assumptions about trading out there, and many of you may have gotten into trading because of one of these assumptions. But this one is a big one, and this was actually one of the things that got me into trading. I thought, well, I'm pretty good with numbers, so trading is all about numbers, and so I'm going to be good at trading. Even though I've heard that 95% of people that try trading usually fail at trading, that doesn't really pertain to me because I'm super smart and I'm good with numbers, so I don't have to worry about that. Okay? Now, all of that being said, what is being measured with these numbers? There are an awful lot of complicated algorithms out there that very smart people have developed to help to understand one thing: people's feelings and emotions. That's it. That's all of that complicated stuff that you are trying to use as indicators or as a trading system is simply trying to anticipate people's feelings and emotions at a particular price. So I started thinking, people's feelings and emotions. Well, how many people? Well, if you're just trying to jump in at any particular time in the market, it could be a number of combinations of thoughts, feelings, and emotions. There could be millions of combinations of thoughts, feelings, and emotions at any particular point in a trading. So what I decided to do is take an event that happens in the markets, and where I can see that event would probably reduce dramatically the number of thoughts, feelings, and emotions that could possibly be happening at that time. So if you look at this, there's only a few thoughts, feelings, and emotions going through these people's heads at this point in time. Maybe only a couple: fear of injury and protect from harm, and that's pretty much it. Now, because there's fewer thoughts, feelings, and emotions, I can now anticipate as a group what they're likely to do next. And I know what they're going to do next. They're going to put their hands down. I didn't see a video, but I know that's what's going to happen. 10 minutes from now, I don't know what they're going to do. Don't have a clue. So what do I need to be doing? Measuring complex or using complex algorithms Or do I just people watch? I mean, I'm not much good at complex algorithms, but people watching, well, that's a whole different thing, right? I asked you to think differently about trading for just this time that we're together today. Let's think differently. Let's stop looking at charts and let's start thinking of them as people's feelings and thoughts and emotions about price. Now, if you look at a chart that way, you can start to see that there are points on this chart where people stopped thinking one way suddenly and started thinking another way. Okay? What caused that? Okay, so this is where I went to work. This is where I started thinking, okay, if I can get my brain around the data that's coming in to cause people to suddenly have that reaction, I can now develop a set of indicators to tell me that that's happening and that their reaction is imminent. All right, so this is a big aha moment for me. This is that new perspective that I got in trading. It actually started to clarify my direction and my understanding of what I really wanted to try to do, what I wanted to try to create. This was a big aha moment for me. I needed to quit trying to make a bunch of money, and I needed to find an edge, any edge, and exploit that edge. And that's exactly what I did. So instead of trying to decipher millions of combinations of thoughts, feelings, and emotion, I instead decided to look at charts and decide and try to anticipate what those people are going to do after a sudden and unexpected event. So when you see something like this, I see a crowd reacting to a stimulus in a predictable way, and I know what they're likely to do next. Richard Wyckoff, who most of you that have been in trading for any period of time, you already know that he's like one of the fathers of modern day trading, even though this was way back in the turn of the last century. He said, and it holds true today, that the study of responses is an almost unerring guide to the technical position of the market. Thing is when he said it, responses happened over hours and days and weeks. Nowadays, it happens in milliseconds. Okay? But it all holds true. So we don't do trend following. We're not counter trend traders. We're not scalpers. We respond to those people that are responding to sudden and unexpected events. So what we're doing is we're looking for a strong push. See this strong push? You can see our indicator, our momentum indicator is, you'll notice a black here, and it starts getting lighter and lighter and lighter till it turns white. And boy, we don't get a whole lot of white ones, because when it turns white, you can expect that exhaustion is imminent. How do I know it's imminent? Because price never continues to do this. Why? Because people start taking profits and traders start getting stopped out. So either way, they're leaving the market, and that causes supply to overwhelm the demand, and price starts to drop. Okay, so that's a potential exhaustion just from this push. We're in an overbought condition. That's this peak outline. We have a trigger suggesting that the orders on this bar are initiated by the market makers, because those orders got filled and processed so much faster than is likely than us retail traders are capable of. Okay, so there has to be some sort of manipulation in place. Then we have a divergence signal suggesting that even though we're setting a higher high here on price, that momentum is actually setting a lower high. Okay, so that means that momentum has already changed directions. All we have to do is figure out. Actually, I went through this whole thing, and I actually had little arrows for illustrating that. So we have momentum, we have some high velocity, we have a strong potential for exhaustion, which all of that combined with that heavy, big push and all of this all at once is a sudden and unexpected event for those people that are actually in a trade at that time. Again, sudden and unexpected can cause two things: buying and selling. Either way, doesn't matter. It creates an event for us to take advantage of. So when you are looking at a chart and you see something that looks like this, we're going to take that, we're going to find out where the condition, what the conditions are, and we're going to print live in real time on the chart when a particular condition exists. When those conditions exist in confluence with each other, you know, where we have particular trade setups or certain particular confluences, then we have trade setups. Okay? So at this point, we're going to let Praveen come back in. He's going to talk about our setups. Now, what he's going to show is some video of some trade setups. Okay? These setups are the same whether they're in futures or whether they're in Forex. They are the same setups, which is why Forex traders have been so anxious for us to design our indicators to be optimized on all types of charts, including Forex, not just futures charts. Okay? So futures traders, pay attention. Even though he's going to be doing this on Forex charts and using some Forex order entry, the setups are the same. Okay? All right, Praveen, you ready? Let's see if the projector works any better this time.
Okay, yes, indeed. Let's check that out. Okay, there we go, guys. Just I think it must be some kind of ClickMing issue, ClickMing server issue. So, anyways, let's get to it. So, as Tony was talking about, I'll be showing you how our setups are basically optimized for the Forex charts and how we still apply the exact same rule sets from futures just to Forex. So there's not much really different that's really changing, fundamentally speaking. Okay, so the main things that that change in Forex compared to futures is that since the Forex market doesn't have a dome layout, and since we can't really use a dome layout since it's kind of impractical using a dome layout in the Forex market, we have something called the FX board. The FX board, which I showed you previously, I think like 30 minutes back, the FX board basically allows you to take these kinds of trades. Also, you could use the chart trader. The chart trader can also provide you a very flexible way of entering, which I showed you just before. Like, it basically allows you to enter a chart right on the chart. So there's no messing about with when you go into MetaTrader 4, you have to go to the you have to go to the currency, then you have to click the limit price, and then you have to set the exact limit price by typing it in and pressing sell, and then you might get slippage. It's definitely not like that. So you just simply go to the FX board, you click on the currency that you need, and that's how you enter. And yeah, okay. So depending on your broker, so some people, what they do is that they tend to have an trader for analysis, but then they have their own trade entry. And if you like MT4, if you like MetaTrader 4, then indeed you can still keep it if you're not if you are still quite connected with the brokerage. If you have a great relationship with your broker. I wonder if I'm not seeing it. Do you see? Is this the same for everyone, or do you have to make sure? Does everyone else see my screen properly, or is it just me? Okay, good. So I had to make sure. Okay, thanks. Thanks, guys. Scott, you may need to restart your browser. So, oh yeah, exactly. Yeah, that's exactly what you should be saying. Okay, yeah. So if you have a great relationship with your broker, then please continue using them. No worries. You can still use our indicators. No worries at all with NinjaTrader 7 or NinjaTrader 8. I recommend NinjaTrader 8 indeed. So the best way is to basically open up a live account. It's very easy to do. Just like any other brokerage, it's maintained by NinjaTrader, and with Gain and FXCM being the brokerages of choice. So if you have a time to open an account, then use NinjaTrader with MetaTrader. Totally fine too. So, but make sure you do take into account of the spread. So depending on your broker, if you like trading other brokerages, make sure that you take into account of the spread. Okay, and not only that, the main fundamental difference with Forex and futures is that futures, all of the volume, it gets concentrated into basically the equities market. So it's very correlated to the equities market, and it's very tied to the US trading session. So from ET to Eastern time, 9:30 a.m. Eastern time to 4:30, I believe, Eastern time. That's when most of the volume resides in. But the forex market is not really tied to this, and although the futures market does trade 24/7, most of the volume is in during those US trading hours. So this means that the Euro USD may not always have the huge pushes that you have with the stock market or you have with the futures market, because it's just the volume isn't as concentrated. It's distributed. So that means the moves, they may be more tempered down. They may be more slower, but it still doesn't mean it's bad. It's just that it's just a little slower to get your profit target. And the great thing is that you can easily manage your trade then, too, because you can just manage your stop according to the market. So yeah, okay. So because of all these reasons, I typically have, from my analysis, a 6 pip target and a 7 pip stop. And some people may be asking, why do you have a 7 pip stop? But remember, we dynamically manage these stops, so we don't stick with a 7 pip stop or 7 tick stop. Either way, tick pip, it means the same thing. It's just the smallest increment of price. So a 6 pip stop just allows us to give some wiggle room or some move room so the trade can work out for us. So we still employ the 7 pip stop, but we also want to ensure that we have taken into account of the spread. So if you have a 2 pip spread, you may want to adjust to say a 7 pip target, depending on the setup. So I personally like the 7 pip target and the 7 pip stop. And indeed, um, if you do have a broker that has even a lower spread, you can change this to a 5 pip target. Okay, so now in regards to opening an account, as I do get some questions about that, it's very easy to do so. And if you want to do so, just go to the website, go to the open account section, and there's 2 options. So you have either FXCM or you have Game, which is basically Forex.com, and that way you can have your own NinjaTrader account, and you can indeed, if you're not ready, just open up a demo account, which I showed you just before. Okay, guys. So now that we've basically covered a bit about the nature or the fundamentals of Forex, let's see some of these trades in action. So first of all, I'll give you guys a look at the FX board. So the FX board basically allows you to enter a trade. So to do this, you basically, this is just an example. So remember, this is not a live trading anyway, but just to see how the FX board, because I know some people, they come from MetaTrader 4 or coming from futures or other markets, they or coming from completely different platforms. This is what you use to enter. Now, this is a good way of entering, and there's another way called a chart trade. So what you do is that you simply go to any currency that you want. So, and this is actually replayed in Market Replay, which is another proprietary feature from NinjaTrader. So now I'm replaying a day I'm replaying the 14th at 2:11 my time, which is Australian time. Okay, so what we do is that we simply place a buy limit order, and that allows us to enter in a trade. And as we can see, we're now in a trade. And if you want to exit, we can close this. And if we want to, and see how everything is very natural in Market Replay too. It's almost like trading in real time. If you didn't see this playback, you probably would have thought this was in real time, but no, this is actually in the past. So if you want to enter a bracket order, you just simply have your own. You can have your own template, or you can just have no bracket at all. It's totally up to you. So if you want a bracket order, you simply select the IIT Forex template, which I have made back in the past previously, and I will show you how to make one of these bracket orders. So what you do is, if you wish to, if you see a setup and you see that it's great, you can flip this tile. You can just simply, if you want, say you have a really nice selling trade, what we can do is that we can directly go to the bid or directly go to the ask, press the sell, and that will place an order, and it will place one of those bracket orders as well. So buy to cover, and at the limit order, which is basically our +6, and our stop market, which is basically a -6. Sorry, a -7. So to do this, to close it out, we just close it out. So as you can see, this is basically what the FX board is. Now let's get to the actual trades. So let's just see how I would take one of these trades. So let's just see with the first trade. So let me just pull that up. One minute, guys. I have this right here. Sorry, there we go. Okay. Let's pull back away. So this is a clean ST play. So right now I'm basically showing you how to enter ATM strategy. And I'll go back just so you guys can see again. You go to custom. You go to you make sure you don't have to select the order quantity, but you can if you want to. Then the parameter type, I'll just set it in as pips. Profit type 6. Make sure it's on a day. Make sure you have none of these options selected. Then you press OK. And oh, that's right, indeed, you can have the save template option, so you can save it as the IT Forex template, which you just showed, which you just saw just before. And now we'll just be waiting for a setup. So I'll just scroll this. So as you guys can see, we need momentum. Right now, we don't have any momentum. So it's just bare, but once we do see a point where the momentum does strike quite fast. So as you can see, now the momentum comes in very fast, but now the price is exhausted. Because momentum has come in, price is exhausted, we can see that we have a speed tick which detects these HFTs or market manipulators, and we combine this with our pullback alerts. And once we get the pullback alert along with the speed tick, this is indeed a very, very nice low-hanging fruit speed tick trade. Remember, like Toby said, but just before, price it can't sustain this kind of movement. So if it does hit the line and all the odds come into our favor, then we can indeed take that trade. So just to go back, I see it confirming. I press the sell ask. I wait for it to get filled, and then I get filled. So there's nothing too complicated about that. We just see the momentum, see if the price hits the level, see that we got a speed tick, see that we have the pullback alert, which alerts us to a potential reversal, and we also have this ricochet, which is also in our favor. Okay, then we move along. Okay. And as you can see, the trades, they do take some time to pan out. They do take some time, but as long as it doesn't violate your rules, and as long as we manage it correctly, like from here, I found that now the price is at a point where we can just move our stop down and lock in a lower, very low loss. So I just locked this in. I locked in a small stop, and then we'll wait, and then boom, a +6 straight into the bank. It's truly amazing stuff. I personally, if I had these indicators when I started at first, when I first started trading forex, I probably would have never quit forex. So I just wish I had these indicators when I first started, but it is what it is. So much better than those harmonic patterns and pin bar reversals. So let's just see how the second trade pans out. So this is basically another way of entering a trade. So I'm using the FX board here. So as you can see, we have the momentum pushing up, pushing up. We have the millimeter. Once we have the millimeter, we hit the level. Now momentum has increased. Remember, momentum is key. If we don't have momentum, if we don't have the key exhausted measure, then we really can't take it. But in this case, price has escalated. It's basically exhausted the liquidity, as you can see by this price gap. It has hit this level, which is a nice strong level. that means most likely, just out of market necessity, it would just most likely pause here. But we have to see if it confirms. Fantastic. Okay, it has confirmed, and there we go. And now we're in. So now we're in minus 100,000, which is basically the measure. Speed fast trade now, which it adds to the confluence as well. Let's go along. And this is, remember, from the FX board, point of view, the FX board. So we don't have the traditional bracket orders. But this is another way of entering. And once we do get our clean 5 ticks, or 6 ticks in this case, 5, 9, 6 tops, done. So as you can see, we've got a clean push and a clean pullback. That's it. And Rob, yeah, make sure you save that question until last. So we'll get back to you very quickly. I just want to demonstrate these setups for you. Okay, so now we have even another hot setup. So got these touch of the support. Enter. And there we go. So it's as easy as that. It really is. So once we get to that point, and then once we finish, this is how it is. So we get to the level, we enter into the trade with a stop limit order. So what I did was simply press stop limit market, and then I just wait for the market, the order to be filled. I get entered into the trade, I get filled in, I wait for the trade to pan out, then I quickly realize that since the price is now at a level, I move my stop down, and then if it's taking even longer, I move my stop down even more. But before I even could, it simply went in my favor, and that's it. Done. So that's basically how we take into account. And remember, this can work not only on 1 minute, but it can work on many time frames, even the 5-minute as well. So hope you guys enjoyed those 3 setups that I found for you, which were really nice setups on the Euro USD and the Australian dollar, which are 2 of the mostly traded instruments in the forex market. Okay, so now with that being said, I'll pass it on back to Tony.
All right, quickly while I'm waiting on this to load up here, Dave, yes, higher time frames will get good signals, but again, the point of this whole presentation is that we're trying to identify an edge that we can exploit very quickly and get in and out of the markets as quickly as possible. Okay, so we have an edge. If you think about those that baseball game, we have an edge when something sudden and unexpected happens. When you have a higher time frame, how sudden and unexpected is it going to be? You know, we kind of lose that little bit of the advantage that we have on a higher time frame. That makes sense? Oh, Praveen, turn your microphone off. Is that better? Did he turn it off? Yeah, good. Okay, so remember we're talking about being response, that what we're doing is we're simply um, able to respond to the reaction that the big money causes. Now they do this, they create these responses by us in a number of different ways. What we're looking for is something very specific, though. I went over this the other day. We have many videos on this, on how these markets are manipulated like this, and you can see those. Ask Connor, and he'll send you links to them. But specifically, what we're looking for is these sudden and unexpected upthrust bars, because they always create some sort of a pullback. Now we have our pullback alert indicator. You look at these two bars. These are two identical bars. If you just looked at a chart, you really don't know much about these bars. But even though one bar is substantially different, so you can see how the ticks are coming into this bar. And you got a few sellers at the beginning, and then maybe the buyers just took over, and they got to one point where the buyers took over, and then the sellers took it back over. So there's really nothing special going on here. There's no particular action going on here. Whereas the exact same looking bar, we actually have a very different type of volume coming into that bar. This type of volume we find to be very conducive to the fact that we're likely to get a pullback. The buyers and sellers find a price point where they start fighting with each other. When that happens, we actually just print right on the chart that the buyers and sellers are fighting with each other at a particular price point. Then we combine that with some of our other indicators for a trade setup. So really all we need is to know when particularly important volume is coming into the markets. This is a typical trade setup for us, a pullback trade. We see these all the time. So like Praveen was saying, we're looking here at momentum. We have hard push down. We had major support. We have an oversold condition. All of that is, we have our pullback alert. All of that is expressing that there is exhaustion here, and we have divergence suggesting that price is, that momentum is actually headed the other way. So we simply look for a confluence of these conditions at a point where we have support and resistance, and that in case the trade still wants to go against us. Okay, so that's all we're looking for. It's really very simple and straightforward. We've got the speed tick indicator, which tells us when the markets are likely being manipulated, because retail traders couldn't possibly trade that fast. So that's what we're doing, is we're reading the processed trades going through. Okay, we have our divergence indicator that suggests momentum has changed directions. Okay, typically people don't use divergence because it's difficult to read. So we take all of that out of the equation, and we just put just those indicators right on the charts, right where your eyes are looking. So you know it's a yes-no condition. There's no guessing. There's no wondering. There's no trying to decipher all of these lines. It's yes or no. Do you have divergence here? Yes, no. If you have divergence, the chances are that price is going to change directions to catch up with momentum. Okay? Momentum almost always leads price. Okay? This actually works so well. We have a new indicator called the Super D that we've taken the same algorithm that we use for the McDiver and the Flash, and we've applied it to these other momentum oscillators. Okay? We also have our Ricochet, which is reading relative order flow. Okay? So when maybe the speed tick is reading actual speed like a speedometer, the Ricochet is measuring the increased acceleration. Okay, so instead of, if the speed tick's looking for 100 miles an hour, the Ricochet is looking for going from 0 to 60 very quickly. Okay, So, and this was kind of a byproduct of the work I was doing with the speed tick. I noticed maybe it didn't get up to 100 miles an hour, but it got up to 60 so fast it caused that sudden and unexpected reaction by the traders that we're trying to target. Okay, so here's our FT reset lines that you asked about, Rob, and we also have our relative strength numbers on the end of the line, so you can anticipate what type of reaction we might get from that line. Obos indicator is one of the most simple indicators we have, and actually one of the most powerful, and I take very few trades that don't have Obos or overbought, oversold. Typically, we're going to need to look at a momentum oscillator like this that we're going to have to put on our charts, but we really don't need all of that information. We're just looking for particular times during this the life of this oscillator where we've gone beyond the extremes to anticipate overbought and oversold. So we really only want to know this information here. So instead of having to take up the whole bottom of the chart, why don't we just put it right where our eyeballs are looking? Okay. So we use in the trade room the RSI, but there are a number of different oscillators you could use instead if you choose to. Okay. So what we're looking for is confluence, right? Confluence is the key. When you get lots of different data sources suggesting that a pullback is imminent, all of them are different, but all of them are suggesting the same things. This is what creates a trade setup for us. Okay? When all of our indicators tend to come together. Now, I have challenged, and I want to challenge you to take this 2 tick a day challenge. Okay? The challenge is trade for 2 tick winner. Stop trading live. Continue practicing in sim. Record how many days in a row you can do it or how many days in a month. Now, talk to a lot of people, and we tell a lot of people to do this. A lot of people tell me, oh, that was great. I loved it. It was a great challenge. It really changed my perspective. Well, we've got one here with us today. Mike was talking about it in the trade room yesterday. And so Mike has been taking the challenge, and he happened to mention to us in the trade room how he's doing on the challenge and how he feels about it. So Mike, Connor, can you make sure Mike's microphone is on, and Mike can jump in here and talk to us about his experience with the 2 tick challenge?
Thanks, Tony. Everybody hear me okay? Am I on there?
Yep, sound good.
Okay, great. Okay, so I took this 2 tick challenge starting about the first week of this past month. I started on it, and I took it because I was beginning to have some difficulty in getting in winning trades, and I was really frustrated and started to have that feeling that Tony described, that high anxiety about waiting for a trade to either succeed or fail. And so I thought I needed to take a step back and regroup a little bit and see if I could get over that and then start being more successful in my trades. And so that's what I've been doing since then. I take the 2 ticks. I've been doing it just slightly different than what Tony just described, but the net effect is the same. I take, typically I've been doing 3 trades, 2 ticks each. And since I have been doing this, I have had nearly 100% success rate. I mentioned yesterday that was the case, and then right after I said that, I had a couple of bad ones. But that happens. You all know that happens. No matter what you do, you can do everything right, and things still just don't go your way. That's the market. And what this forced me to do was I also went back and I looked at my trade rules again, and I found that one of the problems I was having was that I was kind of slacking a little bit on strictly following my trade rules, my trade plan rules, and getting a little bit emotional, or it's the end of the day, I got to get one more trade, and taking one that I probably shouldn't have. So I also challenged myself to be very strict and diligent about following my trade plan. And that has, in spite of what the moderator might be suggesting, we all have different risk tolerances, and we all we all have different goals, and so I'll examine the trades that are suggested or not suggested but noticed. Um, the intentional trader moderators never say take this trade right now. They just say, oh, I'm watching the NQ and it looks like it's headed in the right direction, and then you can make your own decision. So anyway, I went back and I examined that and I started following that as well. And I think, to be honest, that's probably the thing that made the most difference, was being very diligent about that. But sticking with the 2 ticks and being confident, I gained some confidence because I was successful with this, and that feeling of anxiety and nervousness and maybe taking trades out of desperation has pretty much subsided. So my next goal now is the 1st of September. I'm going to shift up to 3 ticks and practice the same way, follow my trade plan very closely, practice in the afternoons, practice after the close, and pick up the ones that maybe I missed. I'm always not quite as quick on the trigger as I could be. Sometimes I don't get the entry into the market in time, and so that's just a very common skill that I need to practice. That's really outside of the trade plan and outside of the 2 ticks concept. But I can give you a witness on this. I can endorse it. I can say that it has worked for me, and it has turned things around to where I'm doing much better than I was before, and my confidence is up. And it's true, I haven't increased my trading account monetarily, but that's another thing, is getting away from worrying so much about what's the balance as did I get those tick amounts. And when you're starting a new skill, or when you're trying to regroup and try to learn to do things a different way, you have to start over. You have to go back to the fundamentals, whether it's golf or a musician, or some sort of a crafts person, or any hobby or anything, or even a reboot of your employment skills, which is a whole other story for me. You have to go back and kind of start over sometimes, and go back and look at what you might be doing wrong and what you could do better, and retrain yourself. It's really easy to gradually slip into bad habits. I'm sure we all know that. And this is a way out of it for me with this trading system. Thanks for giving me the opportunity to mention that, Tony. Appreciate it.
Well, we look forward to hearing how it goes in September when you increase it to 3 ticks.
Yeah, I'll be happy to make those reports as they go. As you know, I'm probably a little overly verbal in the chat room, but that's because I don't have any other friends. So at least not at that time of the morning. I'm on the West Coast, so I'm up pretty early.
All right, Mike. Well, thank you very much. We appreciate it.
You're very welcome. Sure.
Bye-bye.
Bye.
Okay, so take the challenge. It's a confidence builder. Now, Mike was mentioning our trade room, and he comes in the trade room, and we have Rob, let me answer that as soon as we're done here, okay? So ask it again. If I don't come back to it, ask me again. I'm going to answer that for you. We have a trade room that we have a week trial for $49. For you guys, we're going to go ahead and offer a free week trial. Just contact us at this email address, and Connor will get you set up in with a free trial of our trade room, and then send you all the information you need to do that. We also have a couple of other specials for those of you that you're new to bunt trading, and you came to us as a Forex trader that wants to do bunt. We have a package especially designed for you guys. We call it the Rockstar bundle. It helps you to trade our Rockstar trade setup, which is that last one I showed you on the confluence chart. This will only work on Forex charts. Those of you that are trade futures, just hang tight. We have a special for you too. So to give you all the indicators that you need to trade our Rockstar setups. Typically, it's about $13.65 on our website. You can do this introductory offer for only $7.50. All right. Now, it doesn't come with. I mean, not technically, it doesn't come with a 1 month in our trade room because we don't trade forex in our trade room. But I bet you, if you ask Lisa nicely, if you want to come and watch us trade futures, she'll let you. Just ask her when you make the purchase if you can add a 1 month to the trade room, and she'll probably hook you up. Also, and for those of you that don't know, we actually won some awards this past year for the best trade room and best trading software. So we were kind of honored to have won that award when we didn't even know that we'd been nominated. So we have our second special offer. This is for the entire pullback bundle that we have for our futures traders. Now, in this package, you can trade both futures and forex charts. Okay. So this is our full package. It doesn't limit you to just forex. Okay, and it has several more indicators in it, including the super divergence that I just showed you, and then some others that kind of complete the pullback package. So normally this is 3,600. We're going to do it for 1,770. These expire this coming Wednesday. We want to make sure that you guys know about the PayPal special. A lot of our traders really like that because it gives them 6 months to kind of get up to speed on bunt trading, get up to speed on using NinjaTrader. Gives you plenty of time to get good and comfortable before you actually have to pay off the PayPal purchase. So that's a really good offer from PayPal. And if you guys have questions about that, feel free to contact us at bunt@theintentionaltrader.com. Okay, so that's it. Now, I have a question here, but we've been at this for an hour and a half. So for those of you that want to stay and listen to the answers to questions or ask questions, we encourage you to do so. We are going to take a 3-minute potty break, though. Okay? So just give us 3 minutes, and then I'll come back and I'll start out with Rob's question. All right, Rob, are you here so I can make sure you're here when I answer your questions? Okay. Hybrid Rinko bars. Man, they make pretty charts, don't they? Make things nice and neat and tidy and orderly. Here's the problem with those. I actually don't like them. Now, that being said, our indicators do work on them as far as generating signals when a particular condition exists. However, removing time from trading, to me, is the most horrible idea. Because remember what we're measuring. We're measuring people's, with a trading chart, people's thoughts, feelings, and emotions about price at a particular point in time. Now, if you remove time so that you can have a pretty chart, to me, that's removing exceptionally valuable information. Now, I know people do it, and I tried it because I was in a trade room, I think, or doing a trial or something, and the guy showed me these very pretty charts, and what he said was, I have removed the noise. Well, that sounded good to me until I again realized by taking another look at my trading and what it was that I was trying to accomplish, that thing that I had been convinced was noise was actually sweet music that was just played a little bit differently. That time function of charts is essential because we're responding to a reaction over time, right? So it's a cause and effect type of thing, and time is involved in that. Does all that make sense? People try really hard, and I understand that they work really hard at using range bars and Rinka bars and hybrid bars and all of that because they really seem to make a lot of sense. But when somebody, upon further inspection, if somebody tells me they're using range or Rinko or hybrid bars, and then I discuss with them and I talk with them, what I usually am able to figure out is that they're kind of more of a trading hobbyist than somebody who's actually looking to generate an income. They think they are. They think they're trying to generate an income from trading and being a professional trader, but they're approaching it more like a trading hobbyist, which is exactly what I was doing for so many years. I never approached trading the way I expect now that I know, because I'm a professional trader and I know how I have to approach trading. In hindsight, it seems so apparent to me what I was doing, but not until I managed to get to a point in my trading where I know exactly what I'm doing that I realized what I was doing in the past was actually approaching trading like it was a video game. Zofia, on trading Forex, what might be a good alert to use for a heads up alert to a possible setup? That would be Bloodhound, because there is not an alert that you could add to a single indicator to tell you there's a setup. But there are templates inside of, but that we've created for Bloodhound, that if you wanted to put Bloodhound on, of course, it only works on NinjaTrader 7. I don't have it for 8 yet. But if you wanted to use our templates on Bloodhound, then you could get alerts. Now, each indicator Yeah, each indicator inside has the ability to set an alert for the indicator just to draw your attention to that a condition exists. But here's another thing about alerts. If you're trading more than one instrument and you have alerts set for each indicator, an indicator alerts you when a condition exists, right? Not all conditions cause trade setups. So here's what's going to happen. In about 10 minutes, you're going to get so many alerts about conditions existing, you're going to stop looking at your charts because you're going to tune them out, right? They're going to stop being important to you because 90% of them are not going to tell you that you have a trade setup imminent. They're only going to tell you that that condition exists on that bar. So if you want a trade setup alert, you have to use Bloodhound on NinjaTrader 7. You could try it. There are alerts inside the indicator. I promise you, though, mark my words, you'll hate it in a very short time. Absolutely, Rob, not the code itself, but absolutely. It's what you would probably want to do is not try to catch trend continuations from our indicators, because all we're anticipating is a pullback or a you know a retracement. We don't know. But again, we've got a sweet spot, right? We're expecting and we're anticipating, and we can almost predict to a high degree of probability that price is going to stop and turn somewhat to some degree. And I can tell you what it's likely to do over the next couple of minutes. What it's likely to do, not what it's going to do, because nobody knows what it's going to do. But I can tell you what it's likely going to do over the next couple of minutes. Beyond that, I don't have a clue. It could then continue on with the trend that it's in, or it could start a new trend. But what I do know is that if you have a good trending system and you still want to trade the trend, this bundle will help you a lot in scaling. If you don't want to endure the pullbacks or the retracements, especially the ones that are kind of prolonged, start scaling at those points. Absolutely, you can use this for that. I don't, because I don't have I no longer manage my emotions. I no longer need to. I have a system that works, that provides me with a regular income that I'm ahead of 95% of traders out there, or 99%, because my income is very regular. If I keep trying to get more and more and more and more, I'm going to step over the line. I have finally reached a point in my trading where I'm consistent, and my income from month to month is about the same. Make sense? Got any other questions? Did this mic go off? Hello? All right. Well, we had a kind of a long one today. Had a lot to go over. We had our very exciting Forex release, so we wanted to get that in. But I know that a lot of the Forex traders haven't had a chance um, to learn more about Bunt because they're like, well, I trade Forex, so I'm not interested in it because they trade futures. But so we had an awful lot to go over today to introduce some of the Forex traders to what we do. Hopefully you saw something in this that you find compelling and you maybe want to learn more. You can go to our specials page. You can also contact us at bunt@theintentionaltrader.com. All right, everybody, have a great rest of your week, and thanks for coming out and hanging out with us this morning. And hopefully we'll see you all soon.